Your accountant's job is to do one thing. Find as many tax deductions as possible. That way you can pay less money in taxes. If you own your own business or you have a side hustle or you're an independent contractor, now you have opened up the doors of tax deduction possibilities. When you only earn your money from your job, your financial statement looks something like this. You earn money and then you pay taxes and then you can spend whatever is left. But if you own a business or if you're a side hustler or you're an independent contractor, now you have a different financial statement because now you earn just like before, but then you can spend your money and then you only pay taxes on whatever is left. Things switch because of how you earn your money, because the government and the IRS want to incentivize you to invest in your growth, and they incentivize you to go out and take a risk and start a side hustle and start a business because, well, it's risky, and so you get rewarded with less taxes. For example, I use my cell phone and my computer in business. So when I go out and I buy a cell phone and my computer, this is a business expense because I need to use it in my business, so I get to deduct it against my taxes. My team and I went out for lunch today. That was another tax deduction. I just showed you an interview clip that I made with Robert Kiyosaki. Well, in order for me to make that clip, I had to fly out to Scottsdale, Arizona, the beautiful Arizona. In order to record that, I needed to have a hotel room, I needed to have food, I needed to have a car. All of those things were a tax deduction, and along with that, I got a trip to Arizona. See, I make money and then I get to spend money on things like my cell phone, my laptop, my food, and my trips. And then after what's left, that's what I pay taxes on. I spend my money and then I pay taxes, while most people earn money and then they pay their taxes, and then that's when they go out and spend money on their cell phone or their computer or their food or their trips. Now, of course, all of these tax deductions have to be used in my business. They have to be used to help grow the business, and you don't always get to deduct 100% of every dollar that you spend, which is why you want to make sure you speak to a tax professional before you go out and do any of this. But you can see how the tax code incentivizes you to go out and start your own side hustle and start your own business because you get the incentive with the tax code, and this even goes to your car. I hired a new accountant recently and he calls me up last week and he says, "Jaspreet, what do you think about G-Wagons?" I'm like, "They're nice. Why?" He says, "Well, I think you should consider buying a G-Wagon because I think that we can get you a good tax deduction on your G-Wagon." Section 179 says that you can go out and buy business equipment and deduct it against your taxes. But the reason why this is so different and unique right now in 2022 is that there's a special provision that says that until January 1st, 2023, if you go out and you buy a heavy car for your business that weighs over 6,000 pounds, you can deduct 100% of that purchase price against your taxes this year. Typically, the way it works with heavy machinery is you have to deduct a piece of it every single year for a number of years. So if you go out and you bought a $30,000 car, well, you wouldn't be able to deduct all $30,000 this year. You could only deduct a small piece of that, and then you deduct a little bit next year, and the year after that, and the year after that. But now, Section 179 says that until the end of 2022, if you go out and buy a heavy car, you can deduct all of it against your taxes. Now, there are some limits and exceptions to this, so again, talk to a tax professional before you go out and do anything. But what my accountant said is that, yeah, you don't need a G-Wagon to run your business, but what we could potentially claim is that because you have a lifestyle brand, it goes with a lifestyle, so there is a claim that we can make that you as an influencer need a G-Wagon to help you run your personal brand. Now, personally, I'm not going to go out and buy a G-Wagon just for the tax purposes because, again, like I said before, I don't want to just spend my money to spend it. If I'm going to spend my money, I want to do it in a way that's actually going to earn me a return and help me build my business and help the business earn more money over the long term. But these are things that you're seeing people do, and these are potential claims and deductions that you can make if you follow this system. But the only way that you can do that is, again, if you own a business, or if you're a side hustler, or if you're an independent contractor. The fourth thing that you can do is you can invest more aggressively. Now, I've been talking about why you need to invest for so many reasons. You need to invest to build wealth. You should be investing to fight inflation. But now I'm talking about why you need to invest to fight taxes. Investing is something anybody can do regardless of how you earn your money, and it provides a tax break for everybody. You don't need to be a millionaire, a multimillionaire, a 100,000aire in order to start getting tax breaks from investing your money. But what you do have to do is you have to actually invest your money, and you want to make sure you're investing your money the right way. If you go out today and you buy a stock for $100 a share, and then 3 months later it goes up to $200 a share and you sell, well, now you have made some money from your investment, but you're not going to get any tax breaks because you sold your stock within less than a year, and in the IRS's eyes, that's not considered an investment. An investment is something that you hold on to for longer than 1 year, because if you hold on to something for longer than 1 year, now you qualify for something called long-term capital gains rates. Capital gains rates, long-term capital gains rates, are a lower tax rate that you get when you invest your money, and I mean actually invest your money for longer than a year. If you're just trading your money, meaning you're holding investments for less than a year, you don't get those tax breaks. Now, the money that you earn from your investments that you hold on to less than a year, are going to be taxed at the same tax rates that you would have gotten if you earned this money from your job. If you work a job, and let's say you make $40,000 a year from working a job, you're going to have to pay taxes on this money. You're going to have to pay federal taxes, you're going to have to pay state taxes, you're going to have to pay FICA taxes, and after all these taxes, you'll be left with something around, let's say, $32,000, depending on where you live. Some states are going to tax you more, some states are going to tax you less, but something around $32,000. This is if you work a job. Now, if you invest your money like I've been talking about, and you earn $40,000 worth of profits. So now you bought a stock, you bought some real estate, you bought an investment, you held on to it for longer than a year, and you sell it and you have a $40,000 profit. Well, now you don't have to pay any long-term capital gains rates because you're under the threshold. $40,000 is zero. And then depending on where you live, you might not have to pay any state taxes. You don't have to pay any FICA taxes, which means at the end of all of this, you are left with $40,000. $40,000 is more than $32,000, and the reason why you get to keep more is because you earned this money from your investments, not from here. If you make $40,000 in your capital gains, long-term capital gains, your tax rate is zero, and the highest tax rate in 2022 on long-term capital gains rates is 20%. So if you make $1 million from your investments, the most you're going to pay is 20% in taxes. If you enjoyed this short clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to start generating passive income, our team put together an amazing guide on how to start generating passive income for free. All you gotta do is click that button right over there. Thank you for watching, and as always, keep hustling.